Hi traders, you're welcome back to the Forex Geek channel. In this video, we're going to be looking at the secrets of smart money, and we're going to be diving deep into the ultimate smart money concept. Okay, whether you are a beginner or an experienced trader, this video will teach you the powerful strategies used by professional traders to read the market and execute high confidence trades. But before we jump in, make sure to hit that like button and subscribe to the channel so you never miss any of our in-depth trading tutorials. Trust me, you don't want to miss this. All right, so let us get started. What exactly is smart money? Now, this term refers to the money that is controlled by institutional investors. All right, hedge funds, central banks, and other large players in the market. Now, they have the resources and knowledge to move markets and make huge profits. And as individual retail traders, our job is to spot what these institutions are doing and align ourselves with them. After all, the smart money moves the market, so it is crucial we learn how to follow their trail, right? The key to this is understanding market manipulation and institutional footprints. These big players don't just throw money around randomly. They follow very specific patterns and leave traces in the market that we can use to our advantage. In this course, we're going to be showing you exactly how to spot these footprints, all right? Now, one of the first steps in smart money trading is recognizing market structure shifts. In traditional retail trading, many people focus on support and resistance levels, right? In traditional trading, many people focus on support and resistance, trend lines, indicators, and all of that, right? But the smart money, they look for more subtle signs in the market. For example, they don't just buy at every support level. They wait for key shifts in the market structure. So what is a market structure shift? Simply put, it is when the market moves from making higher highs, when the market moves from making higher highs and higher lows to making lower highs and lower lows, or vice versa, right? So this shift signal that something bigger is happening in the market, a potential reversal or continuation. Now, institutions don't enter trades randomly. They enter after seeing these changes in structure, and you should too. So by learning how to identify these shifts early on, you can get in at the right time and ride the wave of smart money moves. Now, let us talk about price action, right? Price action is the movement of the price of a currency pair over time. It is the purest form of market analysis because it reflects everything: the psychology of traders, supply and demand, and market sentiment, right? So smart money traders rely heavily on price action because it tells you everything you need to know about the market's current state. When you are reading price action, you want to look for certain patterns and formations, right? Things like engulfing candles, pin bars, or specific candlestick patterns that indicate uh, market indecision or a change in direction, right? For example, we can see here we had a bearish engulfing pattern here indicating a possible change in direction. You can see that this bearish engulfing pattern appeared right around the top of this bullish structure, right? You can see that we're having higher highs and higher lows, Then towards the end of this bullish structure, we had the formation of a bearish engulfing, right? So that indicated that a bearish trend is possibly, about to commence. And we can see that shortly afterwards, we actually had, a decline, right? We had a break of structure. You can see we had a retest, and then we had the formation of, lower highs and lower lows, right? But here's the key, these patterns, all these, patterns, they are only reliable when they occur at the right levels and after a market structure shift. For example, if you see a strong candlestick pattern, be it a bearish engulfing like I just indicated, or any other candlestick pattern, right around, the end of a trend, or perhaps after a market shift, maybe you notice a pattern for forming after a market shift. Let's just say, okay, here we had a gap. Yeah, we actually had a gap here. But okay, let's see if we had a significant okay, we had something that looks like an evening star after this market shift. So we can see now that this could even be further indications that a decline was about to commence. All right, now these are the types of price action signals that we need to learn how to spot. And once you do, your trades will have a much higher probability of success. Now, here's where things get interesting, right? One of the most powerful concepts in smart money trading is understanding institutional order flow. What this means is that institutions tend to move in large orders, and they can't just execute their trades without affecting the market, right? So this is why we see big moves and price manipulation at key levels. Now, these institutions are placing massive orders to get in or out of the market. As individual traders, we don't have the same resources to move the market, but we can spot where these institutions are placing their orders. How? By looking for areas of liquidity, right? So liquidity is simply where there are enough buy or sell orders to absorb the large trades from institutions. Okay. Now, these areas are often found at key, resistant levels and support levels, right? Or in areas where price consolidates before breaking out, right? So when you understand where the smart money is placing their orders, you can position yourself to enter the market just before a big move. By waiting for these institutions to fill their orders, you can ride the coattails of their big trades and profit when the market moves in your favor. So how do you use all of this in practice? Now, let's just break it down into a few simple strategies. First of all, you should wait for a market structure shift, all right? Do not just jump into trades just because price is bouncing off a support or a resistance level. Wait for a clear shift in the market structure. Okay, once you see a reversal pattern forming, like a lower high followed by a lower low, that is when you know the smart money is taking control. Secondly, use price action confirmation. Once you have identified a potential shift in structure, wait for confirmation from price action. Look for candlestick patterns or breakouts that show that the market is following through on the move, right? And then thirdly, look for liquidity zones, all right? As we discussed earlier, institutions place large orders in areas with high liquidity. So these are the zones you want to target for your entries, right? If price is consolidating at a key level, right, we can see that we actually had a brief consolidation, although, well, it is more like a double top pattern formation, or like a bat pattern, right? Like a Batman pattern. But basically we can see that the change in market structure have happened around here, and this was kind of a brief consolidation, just two tops and one bottom before we had a breakout to the downside, right? So once you have identified a possible consolidation phase showing that the market structure is about to shift, then you should be positioning yourself to look for a confirmation signal that the trend is reversing, all right? Then also ensure that you align with institutional order flow. Once you have spotted the market structure shift and you have seen price action confirmation, make sure to check the overall flow of the market. Are there large institutional moves happening in the same direction? If so, you are in a good position to ride the wave. And that is a wrap for this lesson on the smart money concept. Okay, I hope you're walking away with a better understanding of how to identify and align with the smart money in the market. Remember, trading is not about guessing where price will go. It's about reading the market and trading alongside the institutions that move it. Okay, if you found this video helpful, make sure to hit that like button and don't forget to subscribe so you can keep learning advanced trading strategies. We've got a lot more content coming your way, and I don't want you to miss any of it. Thank you for watching, and I'll see you in the next video.